Hi, welcome to Trading with TK, teaching you to turn ideas into money. We're at www.tradingwithtk.com, and today is Tuesday, January 27th. Well, we got a rally, but it was the slowest moving train that I have ever seen. Holy cow. Actually, the market felt fairly solid. I don't think they were in negative territory at all today. But the days of the big, 200-300 point rallies in one day, I don't think they're anywhere in the near future. But as long as we have a steady upward movement, and what happened today, I think, is that subtle turn that I talked about yesterday was enhanced with today's action. Once again, it doesn't jump out at you, but the rounded bottoms of the patterns speak loud and clear to me. So I think another low is in. I think we're about to start another up wave. How high is it going to go? Well, we'll see. But we'll talk about that in the final segment, and we'll look at some spots. Now, one of my readers wrote in last week, and he was concerned. He said, how can the market rally? Don't we need to have the banks participate? And the answer to that question is, well, actually you don't need them, but it would make the rally that more solid. So yes, we'd like to see the banks rally. I don't know if the banks are going to lead this rally or they're going to follow behind. But nevertheless, my idea for tomorrow is a bank stock, and it's one of the biggest bank stocks, Citicorp. So in just a moment, we'll take a look at that chart. I'll show you how I want to take that idea and turn it into some money, and then we'll take a look at the major indexes, and I'll show you where I think the market could get to on this next push before our next pullback. And that's what we're going to have. We're going to have a series of up waves and then pullbacks, up waves and then pullbacks. And what I foresee is that each high of the wave should be higher than the last wave, and each low should be higher than the last low. So we'll see if it plays out that way. So don't go away. I'll be right back. Okay, we're looking at a daily bar chart of Citicorp. The symbol is C. I used to run this stock on the floor when it was first National City Bank of New York. The symbol was FNC. And then when it became Citicorp, I ran it again for a while. That was a few moons ago, though. Anyway, that doesn't give me any special insight into it, but technically as to what we see. So anyway, Citicorp is a call on the long side. We're looking to buy it just around 355 where it closed. I mean, if it pulls back a dime, it's getting a little bit cheaper. That's all. But it's this pattern here that catches my eye. So my target is $7.30. It's this first resistance area up here. Sell stop. Well, we're closed below the old low right here, which is $2.80 would be where you might want to put your sell stop. Okay, let's talk about it and see what we have here. All right, this was the original low. This was our original rally, and we've come back down. As I said to that reader I spoke about earlier, is that I told him that I thought the bank stocks were basically testing their lows as the market was doing. So this is the low. If you draw a line straight across, you'll see that it seems to be holding this low, and not only that, but we're putting in these this formation with rising bottoms and a flat top. So we've got our ascending triangle. So it's a good bullish pattern. I think we can break out of it, and I do believe with the rest of the market going to rally in the next couple of weeks, I think the stock probably get pretty close to our target of $7.30. So let's recap this. This is Citicorp. This is a call on the long side, and when all said and done, we can probably make ourselves $3 and 50-60 cents, something like that, depending on where we sell it. Okay, so let's move on to major indexes, and we'll take a look at where we think this market could get to. Okay, once again, this is a daily bar chart of the Dow Jones averages, and you can see we closed up $58 today, and we didn't get the kind of day I would have liked to have seen, which pushed a little higher. But the fact that we have a higher high, not by much, but it's there, and we have a higher low. So we're building these rising bottoms look, okay? And once again, let me remind everybody how this is our key spot right in here. I mean, it's either here or it's here, but it's somewhere right in here. And this is where the battle was fought for the last 4 or 5 days. And I think the bulls are now finally starting to win the battle, and they're starting to turn this this pattern around. What's interesting to me about this pattern is the fact that see if I have the right tool here. How rounded it is. Rounded tops and rounded bottoms are a signal that the move is going to move in that direction. So I like the way this is starting to look. By tomorrow, if it turns out to be the kind of pattern I think it's going to be, it should even look even a little bit better than it does today. Okay, so here we have the Russell 2000, and you can pretty much see the same sort of action. It's a little rounded bottom, just trying to turn the corner. So far what has happened is that downtrend has been broken. And we've got this rounded bottom here. Okay, and a quick look at the QQQQs, top 100 NASDAQ stocks. And this is clearly, to me, looks like it's definitely rounding the corner, as I like to call it. Okay, where do I think this market can get to? I think this next push can get us up to there. And if you look at the Dow Jones averages, it pretty much looks similar to this, and that first resistance spot's in the same place. So that would be my target. That's what makes sense to me. I think the market is capable of getting there, and after it gets there, we may have another pullback again, though. So one step at a time. I do believe we're on our way there, and after it gets there, then we'll talk our way through it. Now what I want to do is I want to take a look at the SOX index. Okay, this is a daily bar chart of the SOX index. It's basically the Philadelphia Semiconductor Sector Index. And the reason why I'm bringing this to you is, I mean, it looks very much like the NASDAQ market because there's so many chip stocks in this. But the reason why I'm showing it to you is I want to show you how extended this index has gotten over the regular QQQQs. So some of them are acting a little bit better than others, and I'm taking my cue from all of them. That's why I feel pretty confident that this downtrend now has been broken, and we're going to work some sort of an uptrend back up here. Okay, this is a daily bar chart of Google, and the reason why I'm showing you this is we looked at this chart a couple of days ago because I used it to the fact that I thought the market was turning, and Google might have been one of the first stocks, and you can see how it's starting to extend its move. So this is also an encouraging sign for the market. So I just wanted to point that out, that these days this move is starting to extend itself in Google, which is a key stock. Okay, so that's my view of the market. Until tomorrow, this is TK signing off.